Hi guys, it's me again. A wonderful day to everyone. You may have noticed that there's a change in our logo, and this is now the official logo of VLL Love Educational and Leisure. Today is the continuation of basic bookkeeping. And to start, let me first share to you the good news. From Deuteronomy chapter 5 verse 33, walk in obedience to all that the Lord your God has commanded you, so that you may live and prosper. We already done with the part 1, and today's agenda is the part 2, where practical and simple application of bookkeeping will be discussed. To refresh your memory, the target of this topic are the job seekers, small business owners, and struggling students. And for the purpose, this is the practical, basic, and simple application of bookkeeping. We had previously discussed the two types of bookkeeping, and in line with today's purpose, we will be using the single entry bookkeeping. In the single entry, there's only one entry per transaction. So let's take the cash account, for example. It will begin with the previous balance and then post revenue as addition to cash, post expenses as deduction to cash, and then to calculate the ending balance. So please note that the value of cash will decrease or increase based on transaction amount posted. So in this discussion, we will be using the single entry bookkeeping. On screen are the assumed transactions of ABC Enterprises, Inc. I decided to incorporate the account titles and corresponding debit and credit for you to familiarize the account title in every transaction I will mention. First, ABC Enterprises made an initial capital on June 15, 2021 in the amount of 1 million. So the accounts affected are cash and capital. On June 16, 2021, purchase of steel bars to Dixon Merchandising in cash in the amount of 100,000. So the account are inventory and cash. Next, purchase of various inventory to ME Corporation on credit in the amount of 365,890. So the account would be inventory and accounts payable because the purchase is on credit. On June 17, payment of rental deposit to HDI Company in the amount of 154,000, and the account title are refundable deposits and cash. On the same day, ABC Enterprises paid store rental for the month of June in the amount of 2,250. So since this is an expense account, the entry would be, or the account is rent expense and then cash. Purchase of common and concrete nails to U Corporation on credit in the amount of 7,550. The affected account is inventory and accounts payable. Next, purchase of aluminum and glass to Kush Corporation on credit in the amount of 320,000. So the account titles are inventory and accounts payable. On June 18, ABC Enterprises Inc. purchased laptop in the amount of 20,000. So this is an asset account. This is a fixed asset. So the account title is office equipment and it will be part of the balance sheet. So, and the other account is cash. On June 20, sale of steel bars to Mr. Avellino in cash in the amount of 75,000. Account titles are cash and cost of sales, part of debit, and credit is sales and inventory. On June 30, ABC Enterprises paid salaries to his employees in the amount of 10,000, and the entry would be salaries expense and credit cash. Next one is July 5, sale of various construction materials to Ms. Ana Mendoza on credit in the amount of 140,940, and the affected accounts are accounts receivable and cost of sales and inventory on the credit side. On July 15, ABC Enterprises paid store rental for the month of July in the amount of 4,500. So the account title is rent expense and cash. On July 20, ABC Enterprises collected from Miss Anna amounting to 140,940. So the account title is cash because there's a receipt of cash and credit accounts receivable. Next, on July 22, sale of various construction materials to Mr. Cadiz on credit in the amount of 461,060 pesos. So the affected accounts are accounts receivable and cost of sales and inventory as part of the credit side. Last one, on July 30, ABC Enterprises paid salaries to his employees in the amount of 20,000. So the account affected is salaries and cash. I am using the same transaction as discussed in previous slide, and this is an illustration of a single entry bookkeeping wherein each account has running balance and it will begin with previous balance. Post every transaction to each affected account. As you can see, you can also prepare the balance sheet in this kind of format. Okay, to start, we have June 15, 2021, where Ms. ABC Enterprises Inc. made an initial capital of 1 million. So, as I've mentioned, the affected account are cash and what? Can you guess? All right. And capital, credit. So, in this illustration, we have running balance of 1 million. Okay? So, next transaction is the purchase of steel bars in the amount of 100,000. So, this is a reduction to cash. So, the running balance of 1 million less 100,000. So, we will have 900,000 as the running balance as of June 16. Next one, purchase of various inventory to MB Corporation in the amount of 365,890. This is also a reduction to cash. So from 900 less 365, we will have 434,110, right? On June 17, there's another transaction. This is payment of rental deposit to HDI company. So in the amount of 154,000. So from 534 less 154, so we have a balance of this amount. Can you follow? Okay. So to continue, we have payment of store rental in the amount of 2,250. So again, this is a reduction, and then for the running balance, it will be reduced in this amount, and so on and so forth. So what I've discussed is the cash account, and the other account you can check after this discussion. To further discuss the transaction, the first transaction, as mentioned a while ago, the initial capital of 1 million, the accounts affected are cash and capital stock. So in this case, we have the capital stock of 1 million. So the running balance of capital stock is at 1 million. In this slide, highlighted in green are the transactions considered in the preparation of income statements. For example, the stall rental, it is under the expense account. The sale of steel bars to Mr. Avellino of 60,000. Cost of sales and sales are the affected accounts. Based on the Excel data presented a while ago, you can now prepare balance sheet, income statement, and cash flow the easiest way by linking the ending balance amount of each account. That ends the part 2 of basic bookkeeping. I hope you have learned a lot. You can also send your comments to us. Again, please subscribe via Love Educational and Leisure. Like and share. Hit the notification bell for more updates. Our next topic is inventory. You can always watch our previous vlogs, Part 1, Balance Sheet, Part 2, Income Statement, Part 3, Cash Flow, and Basic Bookkeeping as seen on the screen. Thank you guys. Thank you, Lord, and God bless us all. Bye for now.